Hi guys, good morning. Welcome to Opening Bell on Moneycontrol. I'm Nandita Khemka, and over the next 30 minutes we'll be talking about the cues for trade, all the stocks that will be in focus, and of course all your stock related queries will also be in focus. If you have any queries, you know what to do. Keep them coming in on our live feed on YouTube. We'll try and get them addressed by our guest on the show. But seems like we are being gripped by midweek blues. The global cues are fairly soft, subdued, so to say. We have the US Fed rate decision that will be due later tonight. We will be looking for clues as to when the Fed will start cutting its rates. And of course, the Bank of Japan interest rate decision is also due anytime now. GIFT Nifty hinting at a soft start. So cues are fairly subdued. We'll see where we head as the day progresses. Lots of stocks in focus. Earnings heavy day. Before we get into all that, let's take a look at the top headlines at this hour. Wall Street ends mixed as investors dump mega cap tech stocks before big earnings reports. All eyes will be on the Fed decision later tonight. Meanwhile, Asia trades mixed ahead of the Bank of Japan's interest rate decision. The GIFT Nifty is also implying a muted start for the Indian market. Brent crude tests $79 a barrel, extending losses from the previous session weighed down by persistent demand concerns from China and tensions in West Asia. Meanwhile, gold gains as investors remain optimistic of a rate cut by the US Federal Reserve in September. Tata Consumer's Q1 revenue and EBITDA largely come in line with the estimates, while profit after tax is a miss on account of higher finance costs. And for GAIL, it was an all-round beat in the first quarter. Today, watch out for numbers from the likes of M&M, Maruti, Tata Steel as well as Coal India. And market regulator Sebi proposes sweeping changes to the index derivatives to curb speculation and protect retail investors. Seeks to hike the minimum contract size by 3 to 4 times. Suggests fewer weekly expiries. Well then, yesterday, of course, it was a second straight day of profit booking at highs, although we did end in the green. And we did see a record close as well, by the way, but we did fizzle out from the day's highs, because at one point in time, the Nifty was gaining in triple digits, but towards the end of the session, it was just about higher by, a few odd points. So we saw the, gains fizzling out once again yesterday. Of course, the date with 25,000 gets delayed even further. Today as well, looks like we are looking at a soft start. Of course, whether or not we manage to defy global cues and in fact make a dash at the 25,000 mark once again or not is something we will discover as the day progresses. But before I take you through the other F&O cues and stuff, let me take you through what has happened in terms of Sebi's proposed regulations to curb the frenzy in the derivatives market. Now, Sebi has proposed tighter F&O regulations to boost market stability and protect small investors, including increasing contract sizes by as much as 4 times, collecting options premium upfront and reducing the number of weekly contracts. Now, in the latest consultation paper, Sebi has also suggested reducing weekly options contracts. Now, currently there are index-based contracts that expire every day. Now, the regulator is proposing to allow weekly contracts of one index of an exchange. Now, if this comes to pass, there will be 2 expiries a week. The regulator has suggested increasing the contract size by multiple times to make it harder for retail investors to participate in it. Now, currently, the minimum size required for the contract is 5 to 10 lakh rupees, which was set in 2019. Now, the regulator has proposed increasing it to 15 to 20 lakh rupees in the first phase and then 20 to 30 lakhs in the second phase. Now, as of now, the regulator has mandated upfront collection of 100% margin for trades. The regulator has also proposed rationalizing the strike price methodology to curb the tendency of people to gamble on cheap options. Of course, how will this really impact the volumes in the F&O market is something that I want to ask my technical expert who will be joining us shortly, and also the fact that, whether it will have a big impact on the broker community as well or not. We will of course be joined by Rajesh Palviya in just a bit, but before that, we just have about 6 minutes to go for the opening bell. As I was pointing out that the markets, ended near the flat line yesterday, below 24,900, but still it was a fresh record close for the Nifty. The mid-cap index, mind you, shut shop at record highs. In fact, the Nifty Bank index as well was iffy throughout the day, but it did manage to recover from lows. Financials did slip in the last hour of trade. We saw the likes of Kotak Mahindra Bank, ICICI Bank, falling somewhere around 1% or thereabouts from the day's high. In terms of top Nifty gainers, of course, Tata Motors was one of them. It surged to record highs. Options cues, let's take a look at what the August series is pointing at. Nifty open interest was up 1.9%, added 2.7 lakh shares. The August futures are trading at a premium of 71.8 points vis-a-vis a premium of 74.35. The Nifty bank open interest was down 13.4%, shed somewhere around 1.3 lakh shares. The Nifty put call ratio, that was at 1.23 vis-a-vis 1.14 in the previous session. In terms of stocks in the F&O ban today, no new additions, no deletions. India Cements was added to the list yesterday. It remains in the F&O ban. Fund flows, foreign investors were sellers to the tune of 5,500 crore rupees in the cash market. So that was a large sell figure coming in from the foreign investors. But there was support, buying support from domestic institutional investors. They bought shares worth 5,500 crore rupees, kind of similar amount of FI sell-off that we saw in the cash market. So that was all in all, those were rather all in all the cues for trade. In terms of stocks to watch, of course, as I mentioned, 4 big Nifty earnings to watch out for today. The likes of M&M, Maruti, Coal India, as well as Tata Steel. In terms of Maruti, just want to take you through what to expect really. The Q1 revenues are expected to grow 7%. Profit may surge somewhere around 30% on a YOY basis. Margins are likely to improve 227 basis points on a YOY basis. Price hikes, richer product mix, raw material tailwinds, as well as cross currency benefits. These are some of the tailwinds that will support margins for Maruti in the first quarter. However, EBITDA may slip by 75 basis points on a quarter-on-quarter basis on the back of lower gross margins and higher discounting. We'll talk about other earnings as well, but let me see whether we have our technical expert joining in right now or not. Rajesh Palviya of Axis Securities joining in. Rajesh, is my voice reaching you?
आप नहीं कराएंगे.
Rajesh, great to have you on the show. Before I talk to you about Sebi's proposal on F&O regulations, let me ask you about the index per se. Second straight day of profit booking at highs. This morning the cues are not looking all that encouraging. We have interest rate decisions pending from global central banks as well. Do you expect more consolidation at these levels? Do you think 24,900 will act as a resistance today? Or do you think 25,000 remains a key hurdle in the near term?
So, looking at the data setup, yes, 25,000 may act as a resistance at this moment. The major call writing is still intact around those levels. So I think for this weekly expiry, 25,000 may act as a resistance. But going forward, we believe that this level can be taken out by the market, and possible rally can extend to 25,300 also. So I think one should remain on the long side of trade, as the broader market is showing good traction in terms of buying. Most of the sectors which were underperforming now started participating in this rally. So overall outlook for the market is still, we are holding on the bullish side. Put writing is witnessed around 24,800, 24,700 strikes. So that base has already shifted higher. So we believe that, yes, for expiry point of view, for this weekly expiry point of view, some muted action would be there in the Nifty range bound activity in range of 24,750 on the downside, and 25,000 would be on the higher side. Either side breakout would decide the major direction, but we believe that, the breakout would be most likely would be on the higher side, as the broader market is showing good traction. For Bank Nifty, 52,000 is the major key supply zone at this level. We attempted to cross those level multiple times, but again, failed around those level. Major call concentration is still intact around those levels. So I think Bank Nifty may remain in range of 51,000 to 52,000 for some more couple of days. And either side breakout will decide the major direction for Bank Nifty. But looking at the structure for most of the large cap bank as well as the mid cap bank has also started participating. We believe that there would be a breakout on the higher side above 52,000, and then there would be short covering action to take Nifty, Bank Nifty further higher to 52,500 also. So buy on dips strategy for the Bank Nifty also, with stop loss of 50,800. For Nifty, we are keeping our stop loss at 24,700 to hold long position. Any minor dip should be used as a buying opportunity.
Okay, any minor dip should be used as a buying opportunity. I think we just have a few seconds to go for the market open. But what are you making of the SEBI's proposal on F&O regulations? How is it going to impact volumes? Do you think volumes will now shift from options to futures? And what impact will it have on the broker community?
So I'm not able to hear you out. There is a crack in your voice.
Right. I was asking you about the impact of, if the
Yeah.
SEBI proposal on F&O regulations comes to pass, what kind of impact will it have on volumes? Do you see a shift from options to futures? And, what would the impact be largely on the broker community? I'll come to you on that, Rajesh. Give me a minute because we have, the markets, or the first ticks rather coming in. Markets have opened up and we have opened with a positive bias, 24,900 on your screens. Sensex also 81,600 is where it's at. It's a triple digit move on the Sensex. Mid-cap index continues to show strength. Fresh record high for the mid-cap index. Yesterday it ended at a fresh record. Today as well, strength coming in there in the broader markets, 0.5% higher for the mid-cap index. The breadth is extremely positive. 5:1. That's the NSE advanced decline ratio for you. 1,500 or
Very
1,600
difficult. I am
advances
not able to
to
hear out. Your
369
voice is
declines in
cracking.
early trade. In terms of sectoral movers, then let's see what various sectors are doing. The Nifty Bank Index has opened up in the green. I can see that. In terms of other sectoral movers, yesterday auto was in good stead. Today as well, we have two heavyweights reporting numbers from the auto pack, M&M and Maruti. So Nifty Auto Index up 0.5%. You have banks trading with positive bias. Energy was among the top sectoral gainers yesterday, extending those gains. FMCG, that was a top drag yesterday, was down 1% or thereabouts. Today, it's up 0.3%. You have IT pack as well, was on the back foot yesterday, 0.2% higher for that index. Metals doing well. So all in all, it's a positive, good start. We have all of the sectoral indices trading in the green. India VIX, slight uptick there as well. Volatility does tend to rise, at highs. But volatility index itself has cooled off quite a bit from the kind of levels that we saw a month back. Realty showing strong traction, 0.5% higher for the realty index as well. In terms of individual movers, just want to see what some of the stocks are doing. Of course, Tata Consumer, top Nifty loser, as was being expected because profits were a miss on the back of higher depreciation and interest costs. But margins and revenue were in line with estimates, but clearly reacting to a mixed set of numbers. Tata Consumer, top Nifty loser. Power Grid was, among the gainers yesterday. Today, seeing some profit booking. Axis Bank, Coal India ahead of numbers. IndusInd Bank, Reliance Industries also among the losers today. Grasim, HDFC Life, SBI, which has seen a good string of gains so far this week, is in the red, and so is Tata Motors after hitting fresh high yesterday. In terms of gainers, you have Hindalco that's topping the charts right now, up 1.5% or thereabouts. Maruti ahead of numbers, looking upbeat. ICICI Bank, Adani Ports, Adani Enterprises, so Adani group of stocks in good stead. You have NTPC as well. Yesterday, the stock was up and about, very buoyant. Today as well, extending those gains. M&M ahead of numbers, extending gains, and Bharti Airtel, Sun Pharma, etc. Among the gainers. Rajesh, looking at the open, for now, we are hovering around that 24,900 mark. A dash at 25,000, is it going to be a little too far-fetched today, given the fact that global cues are soft?
So Nandita, I think 25,000 may act as a supply zone. Though we have opened on a positive note, still the call writers are still intact around those levels. So I think major supply zone is 25,000. If we crosses, then yes, there would be a short covering action in Nifty and then possibly really can extend. But till the time we are not able to take out 25,000, I think it's going to be range bound behavior for the market. But yes, stock specific action is there. So I think one should focus more on the stocks, especially in today's session, because we believe that index may remain in sideways for at least for this weekly expiry.
Okay, expect range-bound moves today, be stock specific. That's the advice coming in from Rajesh. But Rajesh, before I talk to you about the Sebi framework, just want to understand what would you be recommending in terms of stock picks for today?
Uh, I'm really sorry. I think there is some technical issue on the voice. I'm not able to make out what exactly you're asking here. So can you just
Uh,
repeat again?
R- Rajesh, your recommendations for today? Any stock recommendations for today?
Yeah. So I think we are focusing on chemical space at this moment, and we believe that one can look to buy Aarti Industry. The stock managed to give breakout of its falling trend line. So I think here we can see a good traction on the higher side. 765, 770 would be the next target for Aarti Industry. So one can look to buy this stock with stop loss of 720. Another space where we are focusing at this juncture, that is pharma space, and from that space I think Sun Pharma can be looked at. Most of the pharma stocks have done well in last couple of days, and the way Sun Pharma has moved up in last week, I think there would be another round of buying interest in this stock, and then possible target towards 1760 to 1780 would be there on the higher side. So Sun Pharma can be looked at to buy with stop loss of 1680. And the third stock that we like is from pant space, that is Asian Pant is also looking promising. Most of the pant stocks have done well in last couple of days, and we have seen very good buying interest in most of the pant stocks in last day. So Asian Pant can be a buy for upside target of 3090 to 3100 with stop loss of 3005.
Okay, those were the recommendations for today. But before I talk about stock queries and other stocks that are in focus, want to understand how will the SEBI's proposal on tighter F&O regulations impact volumes in the futures and options market? Do you see a shift from options to futures, and what would be the impact on the broker community, so to say?
So there is a lot many concern towards the option trading in last couple of months. The voice has been raised by the finance minister, RBI chief, as well as the RBI, the Sebi chief. Everybody was showing the concern of option trading, the euphoria which we have seen in option trading, especially. And the major focus is to protect the interest of this small ticket size retail participants who are losing money on a continuous basis. The data is clearly, they have already published the data that 90% of traders are losing money in option trading. So that is the main agenda to protect all these losses which all small ticket size players are losing in this market. So six, seven major point they have raised in this consultation paper. But looking at the this consultation paper, if I describe in one line, this is a indirectly entry barrier for all small ticket size player in the derivative market. So broadly, if we look at the major impact which is going to have by these measures is you will require higher margin to deploy in the derivative market, because if lot size increase or contract value increase, then it will attract the higher margin. Again, if you increase the margins on expiry days, then again it will require higher margin to deploy. If you remove the benefit of calendar spread, again you will deploy a higher margin. So in a nutshell, if you don't have big capital, don't come to the option market. This is the clear message by all these measures in the all these 6 7 steps which they are going to take in coming months. So yes, it's definitely going to hit the volume of market. It's going to hit the revenues of exchanges as well as to the brokers also, uh, because it's going to hit both sides, like options buyer as well as the option sellers, because the impact cost and the ROI would impact of the writers also as well as the option buyers. 70 80% options buyers, those who are participating in this market, which we have seen significant jump in terms of participant, that is low ticket size. If we go with the sample data, the less than 5 lakh capital they are having in their account, and they are playing in option market, and they are continuously losing in the market. The 30% of the participant, those who are having big capital, and they are making money from out of all this 70%. Those who are having low capital are playing in the option trades, especially the major euphoria which is happening due to everyday expiry. So every day there is a different contract which is going to expire, and the participants are jumping to play all these contracts to make money by buying the option premiums. So this is the major concern, and I think all these 6 7 steps which may definitely going to hit the exchanges volume if all implements. So I think yes. So I think the shift will be there on a cash segment, but it may take time
Right.
because this is not a small step. This is all big steps for the derivative market.
That's true, and as you said, the message is pretty clear. If you don't have the capital, don't come to the capital markets. But on that note, let's shift focus to some stocks. One stock that's catching my attention is BSC. After a good rally, we saw some cool off coming in. Today, it's up 5%. I think entire week it wasn't all that upbeat, but the move that's coming in today, what do you make of it? Do you think it could be the start of a fresh breakout?
I think BSC still has very limited option activity, but the major impact is on the NSE exchange. So BSC has only two contract, but that is Bankex and Sensex. But the kind of movement which we are seeing on a intraday basis today, stock managed to view breakout of its falling channel on a weekly charts. The way stock now holding about 2,500, I think there could be a extension of this rally towards 2,600, 2,625. That is the next supply zone for the stock on the higher side. So again, it's interesting to see, despite of taking the measures to curb this, option activity, BSC is moving in a different direction. So this is clear message by the market participant. Whatever measures you will take, we will find our own way to participate in the market, because the way the new entrant and new participants are have participating in market in last couple of years, that clear message that market will again try to find its own way to make trades. So I think BSC, the way BSC is moving up, it's a surprise move for me also.
Okay, a surprise move coming in on a BSC. But before we move on to our queries, want to get in your thoughts or a chart check on Dixon Tech. This stock has literally doubled in the last 6 months. Numbers have been pretty good on the back of strength in the mobile business, and it has earned a downgrade from CLSA. But the stock is up 4% or thereabouts, hitting, not really hitting, edging closer to its 52-week highs. Still some time away though, 12,879, that's the 52-week high on this chart. But in terms of immediate resistance, what would be the level that you will watch out for here?
Can you repeat the stock name?
Dixon Tech.
Okay. So Dixon Tech is moving in uptrend, and almost stock is now trading near to its all-time high trajectory. The way stock has moved up after a brief corrective move of last couple of weeks, I think there is still potential to continue furthermore upside. Possible target we can see on a positional perspective toward 13,000 also. So I think buy on dip should be your strategy. The way stock is moving in upsloping channel on a weekly chart, that clearly shows that there is a sustained trend for the stock. Whatever minor dips which we are getting in the stock is attracted the buying interest in the decline itself. So I think one should remain on the long side of trade. At this juncture, we would advise to keep your stop loss around 12,000 to hold the position. Possible target on a trading perspective 12,800, and maybe we can see a target of 13,000 also.
Okay, target of 13,000 on Dixon Tech. That's the call. But let's shift focus to all our stock related queries then. The first one is coming in from Nana Prakasam. He wants to know your thoughts on an Indian bank. He already holds some quantity, 850 shares, which he purchased at 590 rupees. For the short term, what's your view here? We had numbers coming out from Indian Bank recently. Profits saw 40% jump, on a YY basis. Here on 595 is where it's quoting at. He is just about making a little bit of profit here. Time to hold on.
Please repeat the stock name. There is an issue in voice today, Nandita. Please.
Rajesh, right, right, Rajesh, I was talking about Indian Bank. Indian Bank.
Indian Bank?
That's correct. That's correct.
Yeah, okay. So Indian Bank is in uptrend. The way stock is, moving across all time frame, we believe that, here we can see continuity. There is outperformance in this bank. If we compare with all other banks, the stock is almost trading its all-time high trajectory. The way stock now giving a breakout of consolidation on a weekly chart, almost 8 to 10 week consolidation breakout is, taking place on the Indian Bank. I think if it stocks holds above 580 mark, then there is a possibility to exhibit good amount of really further higher to 630 to 650 also on a positional perspective. So I think for trading point of view, 580 should be your trailing stop loss to hold the position. And those who are positional trader can deploy some trade if you get opportunity in the decline towards 570, even 580 zone also with stop loss of 550. We believe that, on a positional perspective, this stock has potential to continue furthermore upside to 630, 650 also.
Okay, that's the view on Indian Bank. Hope that answers your query. But, let's move on to the next query then. This one is coming in from Debu K. He wants your thoughts on two stocks from the defense space, Hindustan Aeronautics as well as Astra Micro. We have, of course, seen, a spectacular rally on some of these defense names. But, of course, that rally has, fizzled out a bit in the last 1 month. If you see some of these stocks, they have given negative returns. Do you think that could be utilized, or the dip could be utilized as a buying opportunity? Or would you say wait for some more correction to come in before getting in because of, the kind of surge they've already seen in the last 1 year?
If I clearly heard you talking about Astra Micro, right?
That's correct. Astra Microwave as well as Hindustan Aeronautics.
Okay. So Astra Microwave is now, negotiating with its 20-day moving average, which is placed at around 910 to 915. So that's the immediate, supply zone for the stock at this juncture. But looking at the short to medium term structure, we believe that, here we can see a breakout above 910 or 915 going forward. And once the stock take out above 915, we can see a rally towards 982,000 kind of mark also. Stock is moving in upsloping channel on a weekly chart, and almost stock has taken the support from its lower band of that channel. So I think those who wants to buy at current level also, it's a attractive level to re-enter in Astra Micro. Positionally, we project our target towards 1100 to 1150 also. So one can initiate buy at current level also with stop loss of 870, and positionally stock may continue furthermore upside to 1000 and then 1100 to 1150. Hindustan Aeronautical, there was some corrective move in last couple of week, but recovery is witnessed from the lower level. Now, looking at the near-term structure, if stocks holds above 4800, there is a possibility that stock may attempt to move further higher to 5100. That's the immediate supply zone for the stock on the higher side. And once stock crosses above 5100, then there could be extension of rally to 5400 also. Long-term structure is intact for the HAL. Those who wants to buy it for positional perspective, they can accumulate, buy and accumulate this stock in this decline. Your stop loss should be placed at around 4750 to buy and accumulate the stock. We believe that again stock may resume its uptrend, and then possible target we can see towards 5500 to 5600 also.
Okay, that was the view on HAL and Astra Micro. Debu K had written in. Hope that answers your query. But I want to get in your thoughts on a CMS Info Systems or Map My India as well. This one has come in from Satya CK, our regular viewer. He wants to know your thoughts. The stock has done well on a monthly basis as well. Last 5 sessions also, it has been fairly upbeat. Should one look at this stock with a positional play, or do you think it's a good candidate for with a trading perspective?
So CMS info system, it's continuously moving in uptrend, series of higher top, higher bottom formation in the stock. The way stock is moving across all time frame, I think one should remain invested in the stock. There is a still potential to continue furthermore upside. Possible target 650 to 660 would be there on the higher side. So I think one can hold the position. A trail stop loss now at 555. And we can see target towards 660 to 670 also.
Okay, I beg your pardon, that was CE Infosystems, MapMy India, but this was CMS Infosystems. But let's talk about the next query then. Idea Forge, any thoughts here? Vishal Dave has written in. He wants to know your thoughts on whether one should buy, hold or sell this counter. Idea Forge, would you be looking at this chart?
Nandita, please repeat the stock name.
Idea Forge.
Okay. Idea Forge, if we analyze the structure for Idea Forge, there is some, profit taking at higher level. Multiple supply zone is placed at around 850 zone, 860 zone. Until the stock not crosses above 860, I think the stock may remain under, some pressure. On the downside, the major support zone is placed at around 700 to 690 zone. Though it's a recent listing stock, so I have limited data for the stock, but still looking at the overall structure, we believe that 700 to 690 is the major support zone on the downside. Until the stock not crosses above 860, 65, I think one can buy and accumulate. Once the stock crosses above 860, 865 zone, one can add further more position. Then stock may exhibit rally towards 960 to 990 also. So I think those who wants to buy above breakout can wait for 860 zone, and those who wants to hold it and accumulate it can accumulate in this decline. Your stop loss should be placed at around 690. It's not a trading stock. I think one can buy and accumulate the stock, and I think going forward we may see a breakout on the higher side, and then really could be there around 990 to 1000 level also.
Okay, that's the view on Idea Forge. The next query is coming in from Kanan, and he wants to know your thoughts on Tata Steel. Of course, numbers are coming out today. He already has some holdings which he bought at 131. Should he hold or sell? He also has Maruti at 9871, and he wants to know whether he should sell or hold. Both the companies will be reporting numbers today. So any thoughts here? Should one buy more or should one exit? How would you really approach these two holdings?
Maruti, right. So Maruti, I think one can hold down.
Correct.
Stock managed to give breakout of its supply zone. I think the way stock is now holding about 12,600 mark, I think there is a still possibility to move further higher to 13,500, 13,600. So overall, automobile stocks have witnessed some profit taking in last couple of weeks, but again really has been seen in most of the stocks again. So I think overall long-term structure for most of the automobile stocks are still on the bullish side, and the way Maruti has recovered from its recent dip, we believe that here we can see a further higher target. So I think he may hold on the position with stop loss of 12,600, possible target 13,300 to 13,600 we can see in Maruti. And the second stock, you talking about Tata Consumer?
Tata Steel.
Tata Steel, okay.
Tata
Steel, So Tata Steel is still showing some recovery, but still it's negotiating with its 20-day moving average. Though there is a volatility in most of the metal stocks in last couple of days, the way Tata Steel has recovered from its recent swing low of 155, we do believe that if it's a hold above 155, there is a possibility that stock may able to give breakout about 20-day moving average, which is placed at around 167. If it's happened, then this rally can extend to 174 to 180 also. But I think there would be volatility in metal stocks as global cues are not stable at this juncture. I think metal is very sensitive in terms of global news flow. So I think some volatility would be there. So if you can digest volatility, then you can hold on your position in Tata Steel. But yes, going forward, we do believe that yes, there would be a rally, but it may take time towards 174 to 180 also. So at this moment, we would suggest to keep stop loss of 155 to hold the position.
Okay, that's the view. Hope that answers your query, Vishal. The next query, I want to quickly squeeze in two more queries. We're running out of time, but still, I would just want to get these queries answered. One is coming in from Kartikeya Singh. He wants to know your thoughts on Antony Waste. Rajesh, this stock has rallied 50% in the last 1 month. Is it time to book some profit, or would you be playing it with a higher target price in mind?
Please repeat the stock name, please.
Antony Waste.
Okay. Anthony West very strong. Yeah. Anthony West very strong really. Now stock is trading at around 808. The way stock has moved up post budget announcement, I think this stock has shown a very smart really. The way stock have moved up, I think I would suggest some if you want to buy the stock, I think wait for some cool off effect. Those who have already holding the position can trail stop loss now around 760. That's the trailing stop loss to hold the position. Very strong buying action in last couple of days in this stock. So I think there is a still chance to continue further more upside. Possible target towards 860, 880 we can see. So I think he may hold the position with stop loss of 760. Those who wants to buy the stock can wait for some decline towards 780, then deploy some trade on the long side. 860, 880 would be the next target for the stock.
Okay, 860 to 880 is the next target on the stock, 760 a trailing stop loss. That's the view. Hope that answers your query. The last query really coming in from Raghunath Bharadwaj. He wants to know your thoughts on a CRISIL. He's a long-term investor and he's currently holding shares at the rate of 4,720 rupees per share. Right now, the stock is quoting at 4,400. He's making some bit of a loss here. Any thoughts, any advice here?
So CRISIL is consolidating in a range. The range for this consolidation is 4,500 to 150. This is the broader range which we are seeing for the CRISIL. Looking at the overall structure, stock is still holding the ground for the long-term to medium-term structure. We do believe that till stock is holding above 4,300 level, I think he may hold the position, and there is a possibility that stock may attempt to do breakout over 4,500, and once that breakout happens, then there would be a rally to 4,700 to 4,800 also. So I think he may hold the position with stop loss of 4,300.
Okay, hold on to it with a stop loss of 4,300. Hope that answers your query. Rajesh, before I let you go, I want to get in your thoughts on an Adani, Adani QIP that has opened up, right? It's seen a very, Adani Energy QIP rather. It's seen very strong interest coming in, right? I think there was interest of somewhere around 5 times the shares on offer. Adani Energy, how would you play this stock now on the charts? How is it looking?
Adani Engineering?
Adani Energy.
Okay.
The QIP opened up yesterday.
Yeah. QIP, Adani Energy. Okay. So Adani Energy, yesterday we have seen a rally. Again, stock is now, facing some supply zone around 1180 kind of zone. So I think if stock manages to cross above 1180, so I think then there is a possibility to move further higher to 1250 zone also. At this juncture, I think those who've already bought at lower level can hold the position with the stop loss of 1105. That's the important level to watch for. If it's hold those level, then there is a possibility of giving breakout above 1180. Then the next target 1225 to 1250 would be there.
Okay, that's the view on Adani Energy. But with that, we've come to the end of the show. Rajesh, would like to thank you for taking out time and joining in and sharing your thoughts with us. Look forward to interacting with you again next week. Well, on that note, let's just take a quick look at what the markets are doing. Moving in a range, in a very tight range, 24,890. It's around that level, under 24,900 for now. Mid-cap index holding strong, 0.6%, kind of gains coming in there. Bank Nifty, although, has fizzled out from the days or from opening highs, so to say. The advance decline ratio, is tilted in favor of gainers, almost 2:1. That's the advance decline ratio on the NSE. And in terms of individual movers, of course, Tata Consumer reacting to numbers, top loser. NTPC extending gains, top gainer on the Nifty. Asian Paints, which was, by the way, one of Rajesh's picks, is doing well, up almost 2%. Hindalco, BPCL, this whole OMC basket has been fairly buoyant. Crude has tested that $79 per barrel mark as well. So we are seeing reactions coming in on the likes of BPCL, HPCL, IOC. ONGC also among gainers. Some of the metal names also doing well. So we are, range bound for now. Let's see whether or not we manage to pick up some steam as we progress throughout the day. But earnings heavy day, 4 big Nifty earnings to watch out for. Of course, keep watching Moneycontrol for a quick first cut analysis as well on some of these numbers. But for now, it's a goodbye from me. Thanks a lot for tuning in. Have a great trading day. And of course, stay tuned to Moneycontrol for all your other news and updates.